Hello everyone, good afternoon. Welcome to the Agro Commodity Expose. We will begin shortly. Just we have very small number of persons, so let's just wait and see how many persons join us. It's 6 minutes past 2. Let's see how many persons join us within the next 5 minutes. Okay, so 5 minutes, we'll begin. You're welcome. Okay, yes, I think we can begin. We have a good number to start. Welcome once again to the Agro Commodity Expose, where we take time at least twice a week to look at agro commodities and consider where we can take advantage of them for the week. Right. This meeting is held for educational purposes as well as for trading purposes, right? Um, the last time I was here, my name is Samuel. Um, known as Sam Banks. Last time we were here, we looked at least two commodities, two agro commodities. For those persons who are joining this class for the first time, if you're trading with rally trade, you understand, or as a trader, different instruments have, apart from currencies, especially dollar pairs that have a fixed rate, $10 on one standard lot, $10 per pip on one standard lot. Commodities indices have different profit per pip depending on the broker you're working with. But it happens that when it comes to rally trade, we actually have, when it comes to indices like US 100, US 30, USD, and all that, and we offer one of the highest profit per pip. And it's even better with agro commodities. Instruments like corn, like wheat, like coffee are even more profitable than even the US 2000, US 100, and the 40 for those who do not know. That's why we hold classes like this to analyze these instruments. But yes, I must say that these instruments are capital intensive, capital intensive, kind of very high. If you're trading these instruments, you want to trade agro commodity, you want to trade corn, you want to trade wheat. I don't advise you start with anything like 2 million. I've said it over and over again. For those persons who have high capital, are looking to make high returns, I think agro commodity is a good choice, right? And I've always stated that I have a particular group where there's a particular group where we offer this regular market tips on agro commodity. But to join such, you need to have, or you need to be trading with at least 2 million. I'll offer my phone number at the end of this class so that you can reach out to me if you're interested. But yes, let's jump right into it. Share my chart with us and let us look at. So here we go. This is corn. Oh, this is wheat. We're looking at wheat today. Um, Now, when you're looking at instruments like this, wheat, coffee, corn, these instruments, first of all, they're very much influenced by weather, right? Very much influenced by weather. And they're instruments that actually trend for a while. You understand? These are instruments that they really trend for a while. So let's check wheat, for instance, and let's look at it first of all on the weekly time frame, right? On weekly time frame, you find out that wheat for quite a while has been on kind of a downtrend. Wheat has been on a downtrend, right? Now let's check it out. Wheat has fallen all the way from 2021. Wheat has been on a downtrend even till now, generally speaking, right? But one thing we'll notice if we go back to our daily time frame is the position where wheat is right now. Where we find wheat right now is kind of a significant position because you find out that it's at a zone where on the daily time frame, it's at a zone where it has been rejected couple of times, many times in the past. Okay, so wheat is at a zone where it has been rejected many times in the past, and that's why if we zoom in a bit, you will notice the marked zone here, the place I have marked in yellow. You see how wheat has been rejected around that zone. Okay, and so that means that right now, looking at where wheat is right now, it is in a zone where we should be expecting a push up in the market. Of course, we're not just going to go in and buy immediately. There's certain things that would happen, like this is on the daily time frame. Say on 1 hour, we could actually consider price breaking a particular zone. We'll talk about that. But what I want to point out on the daily time frame here is that you notice that this place is a place where wheat has been rejected from a couple of times, right? So if it is back in that zone, there's a high chance that we could see wheat returning back to the upside. Okay, so let's take it from there and let's look at 1 hour. Now, I want you to notice the style with which I've analyzed this. It's important for you to notice because this is what you should do when you're analyzing the market on your own. It's better to look at the market from a higher time frame down to lower time frame. Okay, yeah, it's better to take your trade on a lower time frame, but do your analysis from a higher time frame downwards, so that you can get the general view, the general picture of the market, and you can now go your lower time frame to pick your entry, to take your trade, right? So that is how it works. Now let's look at this. Um, So since we expect that wheat is at a point where it was rejected on the daily time frame, it means that we should be expecting some level of rejection even trading wheat. Okay, and this is 1 hour time frame. Let's now if that buy is going to start, that buy that we're expecting on wheat, if it's going to begin, we should begin to see consecutive highs at least. Okay, that means that if you check wheat from here, where wheat came low to this point, retrace, give a lower low, right, and then give a higher high at this point here, only to come down to a lower low. So the trend is not active yet. The trend is not fixed yet. Okay, so if I'm going to take advantage of wheat, I'm going to look out for the most recent resistance point, the most recent resistance point, and that point is this place here. Okay, I'm using, let me give us a different color so that, let me use a blue. Good. Right? So I could even take out this yellow line that I had here before. I take it out. Let me put in. Now, this is the zone we are looking at. Remember that we have said the wheat is at a point where the last couple of times it has been around that point, it was rejected. So we expect a push up in the market. But even if we expect a push up in the market, all we need to do is to watch what it does around this point here. Okay, in recent time, I've told us that um the solution to consistency in trading is not just buy stop sell stop as many of us do. Okay, we just place buy stop, we place sell stop, we wait for high impact, place buy stop sell, place sell stop. No, sometimes or many times consistency in trading is all about being patient. Have that zone marked out. Watch out for what the market does around that zone. So what are we saying? We're saying that if this is the most recent high, we should be looking out for a buy once price is able to break that high. Right, we should be looking out for a buy once price is able to break that high. Right, even my 50 period moving average here shows that there's a high chance that this bullish move is likely going to continue. So what do? Wait for price to break this zone. And what does that mean? It means that the body of the candle has to close above this zone. Body of the candle has to close above this marked zone. Body of the candle has to close above. So what will happen? Price is likely going to break above it to push up. So from here, price is going to break above that zone to push up. And then we're going to wait for price to come back into the zone to retest. And from that retest, that is when we will now look out for a buy to the upside. So what have I said? We have the most recent high here. Let price break above it. That means let the market close above it. In that sense, if you're going to be placing pending order here, that would be too risky, right? Because we're waiting for candles to close. The candle has to close before we determine whether the market has broken it or not. So once price closes above it, we expect or wait for price to return back to retest, and then we can take our buy to the upside, right? And in that place, we can look out for a buy on wheat is this zone here. Okay, look out for a buy on wheat is this zone here. What does that mean? It means that if wheat sells into this zone, if wheat sells into this zone, we can take a buy from it because this is like another block. And considering that our bias is bullish, we can take a buy from here and have our stop loss below this zone, right? Now, what happens if we take our buy here, if we take our buy around this zone and somehow the market closes below, the body of the candle closes below here? Okay, if we take a buy around here and the body of the candle closes below here, that will mean that price has broken that particular point. And what will happen is that price would need to close that buy. Price will return back into this zone to retest, and then we can now take that sell to the downside. Okay, so looking at wheat, the general trend of the market has actually been a bearish trend. The general trend of this market is bearish. If we even check on the daily time frame, it's bearish. What we have just said is that we've noticed that wheat has sold to a place where it's at a place where it has been rejected quite a number of times. It has been rejected quite a number of times. So we need to be careful with that for that sell. And that is why we said we could look out for a buy at this point, but not just entering and taking an immediate buy. That would be too risky. Wait for price to break above the most recent high. Let price break above that most recent high. If price breaks above that zone, then we are looking out for that buy. Okay, but instead, if price breaks above that zone, we can take a buy or wait for price. Better still wait for price to return to retest that zone, and then we take a buy from there. Okay, so I think that this is one way to look out for trading wheat. for this. Now, also understand that some of these instruments, especially for instance 25th, which is next tomorrow, there will be no trading, right? There will be no trading. But something like 24th, something like 26th, the market will be active. There may be change in trading hours. There might be change in trading hours. So what I would advise you to do for trading this instrument, make sure you visit our website. Go to rally.trade, go to announcement, go to rally.trade, go to announcement, and you can check the closing time or the trading hours for each of these instruments. Better still, you can even come to your market watch here, right click and select what? Specification. Right click, select specification. You can see the open and close time of these markets. You can see it here. Okay, Monday, Tuesday, Wednesday. You can see it here, so that you know, because sometimes they open at like this instrument now could stop trading to open at around 3:35. You understand? So that's that. But yes, that is what I'm expecting for wheat, at least for the most recent move that we expect from wheat, right? Now, I've said to look at this top pattern, but also said if price can break below this point, if price, anything that makes price to break below, because personally I expect price to come down here and buy from here. Even if price sells to this place, I'll be looking out for a buy from here. But if price can break this place and close below this point, then that sell is in effect. The trend is still will still continue. So we expect the market to retest and then we'll sell from there. Expect market to retest and sell from there. Okay, that is how I will trade wheat. That's how I'll trade wheat. Then let's look at coffee. This is coffee. Let's look at coffee. Coffee has actually has been on an uptrend, as against the way wheat has been on a downtrend. Coffee has been on the, and that's even now as we approach the festive season. It's more of a cold season. It's that it's snowing in other parts of the world. It's cold. The demand for coffee, okay, as something that you take during the cold season is quite high, and so that is why it's one of the reasons why you see an upward trend in the price of coffee, right? But let's look at something here now. You will notice that with the past 2 weeks, we see this huge rejection in the price of coffee. See that huge rejection in the price of coffee, and that tells us something. Tells us that there's a very big rejection happening in this market. Okay, big rejection. And when you have that kind of rejection, it could signify the end of a trend, or it could signify an imminent retracement in the trend. So if coffee is giving us these two big rejection like this on a weekly time frame, it's very possible that we see some further fall in the price of coffee, at least some level of retracement in the price of coffee, right? So let's look at this. Let's go to the daily time frame. Good. What do we have here? On the daily time frame, price made this high, retraced, gave us a higher high, retraced, and gave us another high. But let's look at this. Let me mark this with so from here, price came down. If you follow my trend line here, price came down, and from that place, price gave a higher high, right? Good. Then price retraced from there. And considering that is an uptrend, we expect price to give a higher high. But in this case, price gave a lower high. Price gave a lower high. So what does that mean? This trend, or the change in trend, is going to be confirmed if somehow price can come and close below this last low. Anything that makes price to close below this lower low, it means that we could see a further sell in the price of coffee. Okay, it's possible to see a further sell in the price of coffee. So that said, we have a zone we are looking out for a sell. Okay, if we're going to look out for a further sell in the price of coffee, price has to break below this place on the 1 hour time frame. And I'm talking around the 313 zone. Price has to break below that 313 zone. Now, this does not mean you should go and place a penny. I would not even advise you to place a penny because people will say, oh, if price is going to break below here, let me just place a sell stop. No, that's not what you should do. What you should do is to monitor this market and see how price performs around this place. Anything that makes price to break below this zone, then we have our answer for a further sell. Okay, if price breaks below this zone, this 313 zone, 310 zone, what I will do is, let's say price breaks below it, good, I will wait for a retest of that zone. Price retest that zone, and that is where I will now look out for taking my sales to the downside for a lower low. You understand? That's what I would be looking out for in the price of coffee. Let price break the 310 zone. If it breaks that 310 zone, then expect a retest. And at that retest, that's where you can take advantage of a sell to the downside. Okay, and that is what an analysis is all about. Okay, it's to take away emotion or sentiment, and just look at the market, look at the general direction of the market, take advantage of that general direction. Okay, so that is it. Another place I'll be looking out that seems interesting, the price of coffee, is this other block here. Although it's not very active, it's not something I trust because it's supposed to lead price to break this zone. If it leads price to break this zone, then this would be a good place to also look out for a sell from. This would be a good place to look out for a sell from. But that said, anything that can make price to break above this point here, then I would expect that the market pulls back into it and pushes up. Okay, but I'm more comfortable with waiting for price to break 310 zone. If that sell we've seen on weekly time frame, if it's valid, price will break below 310 zone, retest it, and head further down. You understand? So that is how, that is what I think for coffee. That's what I think for wheat. Okay. Um, Once again, these instruments are instruments that demand huge capital, so that you're trading your it's highly risky if you're trading with very little capital. It's very rewarding, but highly risky if you're trading with lower capital. So, like I said, have special groups, special classes where we give more frequent analysis in this. But trust me, to join that class, you need to have an account size of at least 2 million naira, which is not even up to $2,000 anymore. So, the standard used to be $2,000 you know. But yeah, if you're doing that, you can reach out to me. But that said, um, tomorrow we're still going to have another session by 2 p.m. And tomorrow we'll be looking at indices. We'll be looking at indices, D30, US 30, US 100. We'll be looking at indices. Okay. We could next tomorrow we'll have one on currencies. Oh, next tomorrow is Christmas, so we'll not be having a class next tomorrow. Not be having a class up at the but at least you can join us tomorrow for the session on the index market, right? But this is where we'll be drawing a curtain on analyzing agro commodity. We have looked at coffee, we have looked at wheat today. I will drop my contact. Please just reach me on WhatsApp. Only WhatsApp. Just WhatsApp. Okay? Reach me on WhatsApp. And I will be able to attend to you as the best of my ability. Okay? So yes, thank you so much. I don't know if anybody has any question. If you have any question, drop it on the chat and I will attend to it. Okay. But if you don't have any question, this is the end of the training we've had. Thank you so much.